All of O-Levels Business Studies Section 6 definitions in 4 minutes. Gross Domestic Product, GDP, is the total value of output of goods and services in a country in 1 year. A recession is when there is a period of falling GDP. Inflation is the increase in the average price level of goods and services over time. Unemployment exists when the people who are willing and able to work cannot find a job. Economic growth is when a country's GDP increases. More goods and services are produced than in the previous year. The balance of payments records the difference between a country's exports and imports. Real income is the value of income, and it falls when prices rise faster than money income. Exports are goods and services sold from one country to other countries. Imports are goods and services bought by one country from other countries. The exchange rate is the price of one currency in terms of another. Exchange rate depreciation is the fall in value of a currency compared with other currencies. Fiscal policy is any change by the government in tax rates or public sector spending. Direct taxes are paid directly from incomes, for example, income tax or profits tax. Indirect taxes are added to the prices of goods, and taxpayers pay the tax as they purchase the goods, for example, VAT. Disposable income is the level of income a taxpayer has after paying income tax. An import tariff is a tax on an imported product. An import quota is a physical limit on the quantity of a product that can be imported. Monetary policy is a change in interest rates by the government or central bank. Exchange rate depreciation is the rise in the value of a currency compared with other currencies. Supply-side policies try to increase the competitiveness of industries in an economy against those from other countries. Policies to make the economy more efficient. Social responsibility is when a business decision benefits stakeholders other than shareholders. For example, a decision to protect the environment by reducing pollution by using the latest and greenest production equipment. Environment is our natural world, including, for example, pure air, clean water, and undeveloped countryside. Global warming is a gradual increase in the overall temperature of the Earth's atmosphere, generally thought to be caused by increased levels of carbon dioxide, CFCs, and other pollutants in the atmosphere. A pressure group is made up of people who want to change business, or government, decisions by taking action, such as organizing consumer boycotts. Private costs of an activity are the cost paid for by a business or the consumer of the product. Private benefits of an activity are the gains to a business or the consumer of the product. External costs are costs paid for by the rest of society other than the business as a result of business activity. External benefits are the gains to the rest of society other than the business as a result of business activity. Social cost equals external costs plus private costs. Social benefit equals external benefits plus private benefits. Sustainable development is development which does not put at risk the living standards of future generations. Pressure groups are groups of people who act together to try to force businesses or governments to adopt certain policies. A consumer boycott is when consumers decide not to buy products from businesses that dare not act in a socially responsible way. Ethical decisions are based on a moral code, sometimes referred to as doing the right thing. Globalization is the term now widely used to describe increases in worldwide trade and movement of people and capital between countries. Free trade agreements exist when countries agree to trade imports-exports with no barriers, such as tariffs or quotas. An import tariff is a tax placed on imported goods when they arrive in the country. An import quota is a restriction on the quantity of a product that can be imported. Protectionism is when a government protects domestic businesses from foreign competition using tariffs and quotas. Multinational businesses are those with factories, production or service operations in more than one country. These are sometimes known as transitional businesses. Exchange rate is the price of one currency in terms of another currency. Currency appreciation occurs when the value of a currency rises. It buys more of another currency than before. Currency depreciation occurs when the value of a currency falls. It buys less of another currency than before. Thanks for watching.